three investors, Ben Mirzan, Matt McKeever, and our guest investor will watch as entrepreneurs present their deals with only one chance to make the pitch. Brought to you by Cashflow Tribe.
Today, I'm asking you investors for $1 million.
You're asking for $1 million. That's a big ask. Right off the bat, that is a huge ask.
Your ask of $1 million doesn't scare me.
I don't know if the numbers are adding up for me, man.
I like the creativity behind the idea of giving us 10% equity in the deals you do. But I think that even that sort of language is a bit convoluted.
I will refuse to invest in someone that refuses to invest in themselves.
Straight to the point. What we would like to do is to present you with an opportunity to earn over 21% ROI.
Anybody can buy a duplex. It takes a special person to take that duplex and turn it into a business.
Tying up money for 2 years for the sort of upside that we're looking at just doesn't really fit within my personal investing.
Like, let's not be greedy, guys.
there's still a lot of speculation for me. And if I'm going to speculate, I might as well put my money in the stock market.
Okay, just one at a time.
Not necessarily.
Just reflecting back on the last deal that you were attempting to fund there with Matt, where there was absolute no solid asset at all. It was just on the hopes that someone's marketing is going to pay off.
If you would have had one more slide, you'd have lost me.
I'm going to disagree a little bit. I cannot see that happening.
Don't let the pitch make you a little. Come on, man. When you come to the pitch, man, be ready.
Someone's marketing is going to pay off.
If you would have had one more slide, you'd have lost me.
I'm going to disagree a little bit. I cannot see that happening.
Don't let the pitch make you a little. Come on, man. When you come to the pitch, man, be ready.
Someone's marketing is going to pay off.
If you would have had one more slide, you'd have lost me.
I'm going to disagree a little bit. I cannot see that happening.
Don't let the pitch make you a little. Come on, man. When you come to the pitch, man, be ready.
Someone's marketing is going to pay off.
If you would have had one more slide, you'd have lost me.
I'm going to disagree a little bit. I cannot see that happening.
Don't let the pitch make you a little. Come on, man.
You are on the clock. 5 minutes. Let's go.
Today, I'm asking you investors for $1 million.
For $100,000.
$146,000.
I'm asking for $300,000.
You're asking for $1 million. That's a big ask.
For me, I do have concerns.
I'm a very nice guy until you ask me for money.
You have an opportunity to play a bigger league. That takes guts. It takes balls. You don't ask, you don't get.
I got to know in the next 30 seconds, and I'm not partnering with anybody else on this deal.
Like, you're getting a great deal, in my opinion.
Today, I'm going to go with my gut and choose.
Warning. All lenders are professional Canadian real estate investors who invest their own money into these deals. Every pitch is made cold, and every lender will make offers at their own risk. 3 investors: Ben Mirzan, Matt McKeever, and our guest investor will watch as entrepreneurs present their deals with only one chance to make the pitch. Brought to you by Cashflow Tribe.
Daniel, we need you on mute.
My apologies, everybody. Ladies and gentlemen, you didn't hear me the whole time because I was on mute, so let me say it again. I want to welcome each and every one of you, ladies and gentlemen, boys and girls. Even if you got cats and dogs, I want to extend a great welcome for all of you tuning in. This is The Pitch, brought to you by Cashflow Tribe, Canada's #1 leading investing community in real estate. And so I am your host, Daniel Blagrove, and this is the show where investors make a pitch to potential money partners for a chance to raise capital for their real estate investments. I want to know where each and every one of you are coming from. I want to know in the comments, let us know what city you're tuning in from. I know we got people from Alberta, maybe you're from British Columbia. Let us know if you're in New Brunswick. And if you're in my home province of Ontario, come on, make it loud, make it proud. I want to know where you're coming from. But I don't want to waste any time because if you're asking me, I want to see who's going to lend out some dimes. So without further ado, I'm going to introduce the investors or the judges, however you like to see them. We're going to bring them right on. And I'm going to bring on the first person. Listen, he at 26 years old has been able to travel to several parts of the world. He was able to quit his job at 24 to do real estate full time. And since then, he has become the managing partner and CEO of Make It So, Inc., one of Canada's largest and fastest growing wholesaling companies. He is a private lender and a real estate educator. I bring you Adam Martin. Adam, bring yourself on, brother. How are you doing this evening?
Hey, everybody. How are you tonight? Thank you so much, guys, for having me on. One of the reasons why I was invited to join this show and one of the reasons why I was so eager to participate is I've actually had the experience this year of growing our business in partnership with Matt McKeever from $10,000 a month up to $300,000 a month consistently. And that's something that I'm hoping to impart my knowledge on you guys tonight as part of being part of this great presentation as a judge here. So super excited. Thanks for inviting me on, Daniel.
Dude, the pleasure's all mine. I gotta bring on the next person, and he's another judge, another money partner who's got cash ready and willing to invest. So listen, while he's working virtually and growing businesses as he travels, he is mentoring and educating real estate investors across Canada, pushing for growth and personal development, not only for himself, but every single person that he comes in contact with. He comes with money to lend, he comes with money to spend, and he has the desire to make money until the end. I bring you Ben Mirzan. What is going on, my brother?
What is going on, Daniel Blagrove? I am back ready to kick some ass, analyze some deals,
and get that cash working. Good to be
Come
here.
on. All right. I love it. I love it. We got one more person. Hold your horses. Hold on tight. I know we got some people coming in from Montreal. I saw some Castro Tribe members right now in Florida. Come on, man. We everywhere. I love to see it. Allison, shout out to you. All right. We got to bring on the other person because I cannot wait to get to business. All right. So listen out. He has set a 10-year goal to quit his job by the age of 35, but he accomplished this feat by the age of 31. Over this time, he has started and grown multiple seven-figure businesses. He once had a beard, but he has no fear. And if you don't know him, he's about to make it very clear. His name is Matt McKeever.
Hey guys, how's it going? Really excited for tonight. Looking forward to finding a few more deals. The last deal's been going well so far. I updated a few of the YouTube commenters and let everyone know that we've already done $110,000 in wholesale fees with Brandon. So looking forward to finding some more good deals tonight.
I love it. I love it. And so for those who don't know and want to get a bit more information about Matt and Ben, we're going to play just a couple videos for you to get to know their backgrounds, to know exactly where they're coming from and why they're in this position today to evaluate some deals. An immigrant from Romania, Ben Mirzan escaped communism and became Southwestern Ontario's largest single-family investor. Ben has done almost 300 deals in Canada, becoming a multimillionaire by the age of 30, and is the CEO of Cashflow Tribe, who has a passion for helping others reach their true potential. Achieving financial independence and quitting his day job at the age of 31, serial entrepreneur and angel investor Matt McKeever is Canada's leading real estate investor on YouTube. With a portfolio of over 150 units, Matt shares his wisdom with his growing following of over 70,000 subscribers and over 4.5 million views. Awesome. I love it. Well, listen, I'm so ready. I hope you guys are. But before we get into it, I want to let you know two things. We're going to be having investors who are looking to make a pitch tonight. All right. And here's what's going to happen. It's either all of them are going to get a deal, one of them are going to get a deal, or nobody's going to get a deal. So here's what I want you to put in the chat. Let me know between 0, 1, or 2, how many deals will be made tonight. Ben says he will give 100 cash tonight to someone who goes and does a watch party. Okay, I love it. I love it. Before we even do a deal, we're already handing out money. Come on, man.
Listen, Blake, well, before you get going, I have a competition with Matt McKeever. I'm live. Matt McKeever's live. I'm hosting a competition. Who can get the most live shares tonight? I'm dropping this. I'm dropping $100 tonight for somebody who hosts a watch party on Ben Mirzan's Facebook page, and I might get a little silly and amp that up before the night is over. Who knows how high I'm willing to go to beat Matt McKeever.
That's awesome. I love it. There's only one way to do this, and you got to do it with fire and passion. So I'm going to go ahead and bring on the first pitcher. All right. Listen, he was born in Toronto. So all the Toronto people say what is up. But he grew up in Sault Ste. Marie. Okay. He eventually came back to Toronto and has been doing property management for 8 years. And eventually he got into investing over the last 8 months. So his goal is to raise capital for his 4th investment property. So I bring you Ben Boyo.
Hey, how's it going, everybody? Thank you for having me on this show. As I've said a number of times before, I look up to each and every one of you. So really excited to have the opportunity to bring an opportunity in front of you.
Yes, sir. Yes, sir. Welcome to the show. We're glad to have you. So, Ben, listen, you have 5 minutes to make your pitch uninterrupted. Make it very clear so our investors and our audience can hear it. The floor is all yours in 5, 4, 3, 2, 1, go.
All right. Well, thank you, guys. So what I'd like to do is offer you a return on invested capital at 20% over your investment in under 6 months. So what I'm asking for that is $40,000 down to start on March 1st with an option to withdraw another $70,000 over the time of a reno project at 0% interest until the ARV actually is appraised and we get our refinance come through. So how that will work and your return will be calculated based off the ratio of the total funds withdrawn against the total cost invested in that property, and then multiplied by 80% of the ARV. So how to break that down? So what we have right now, let's assume that for this property that we're taking a look at, it's got an ARV of 165. In terms of rental costs, I think we're very, very comfortable with what we put in there. It will require approximately $65,000 in order to get it exactly where we want it, and our comp is extremely solid. The rental costs have been double verified by both me as well as a contractor, and we actually calculated them independently and came to the same number. And the comps were actually generated from a comp realtor. If we can go down one page there. So the comps were actually brought by an independent party who was actually taking a look at purchasing this property themselves before I snatched before they did. So this is their best comp. As you can see, that's 3 minutes away. This is a single family home, whereas the one that I'm looking for investment on is a duplex. It's also got a lot of 4,400 square feet, whereas this one is much smaller. And there's an additional comps if you click on the file there on the right that you can take a look at, where the values range across the city depending on what neighborhood between 140 to 198. So what I'm offering to do is, over the course of the time that the money gets pulled, so let's say in the scenario where I need all $110,000 at the ARV, which is, I believe, is conservative at 165. Once it's appraised and the refi comes through, so that's $132,000. That would be your total return. Now, finally, another couple points. I would like this agreement to live with the property, and I'd like this loan to be transferable by assignment. And then finally, I'd like the opportunity to be able to repeat these kind of deals with you.
I love it. I love it. So just so we're clear, this brings you to the end of this pitch, right?
That's my pitch.
Okay, perfect. So let me know if I got this right. I want to break it down for the audience and for our investors so we're all on the same page. High level. So we want to get a duplex here in a good area. You have the property under contract for $40,000. The market rents range between $1,700 and $1,900 per month. Renovation cost $60,000, but after it's fully renovated, the estimated value is about $165,000. So what you're looking for is $40,000, but up to $110,000 for about 6 months. Is that right? Did I get that right in the summary?
That is correct. So I'd like the option to withdraw as required, and that would be backed. The $40,000 would be backed by the actual property. That would be your collateral. And as the receipts come in and you start to see things repaired, it would be withdrawn like a line of credit.
I love it. I love it. Okay, guys, I hope you are ready at home, ready for our investor to dissect this deal. Well, get ready because we're about to get right into it. We will be right back after these words from Cashflow Tribe. All right, welcome back to The Pitch, brought to you by Cashflow Tribe, Canada's #1 real estate investing community. I'm your host, Daniel Blakegrove. Now, hold on. After our guests make their pitch, we will be hanging out in where we call the dugout. Listen, it's a Zoom call to break down these deals that you're hearing tonight so that you can learn the good, the bad, and the ugly so you can raise capital for your deals. This call is for premium members of Cashflow Tribe. So go and head over to cashflowtribe.com and grab yourself a premium membership so you can hang out with us on Zoom to break down these deals. Okay, listen, Ben, Matt, Adam, now is the time to get your questions answered. because once we move into the final offer stage, you will need to make a decision based on the information you already have. All right, I'm going to start with Adam. The floor is yours.
Hey, Ben. Definitely appreciate your communication skills and the way that you represented that pitch. I think there was a lot of information there that could help somebody make a decision. A couple of the things that I just had on my note is I'm just a little bit confused about the tiered nature of it. And essentially, you want to be able to draw, which I understand, because a lot of construction loans, you would want to draw it out in essentially portions or amounts as you're spending. But I guess a couple of things that are running through my head, because I've obviously written 1,000+ private offers in the last year or so, and I've analyzed a lot of deals. So one of the things that was missing from this pitch that I would love to see is more comparables. Like, we saw one great comparable of a brand new house that's in really nice shape. So I guess I'm just thinking about, how long is it going to take to actually convert this property to that condition? And then if we were to miss the mark, right? Say, for example, if there's any supply chain interruptions or contractor issues, if we had to actually extend the amount of time we were investing in this property, would we be able to actually exit at somewhere below there and recapture our capital? So I think that's a big question mark for me at this point. Is just like, how do I exit from this if we're not actually able to get 165? And what are the closest comparables that I can fall back to?
Can I respond, or is that a question, or so anyways, there is a list of comparables in this file as well. If we can open them up, there's about 5 different comparables that we can take a look at if you'd like to. So it's on the PDF. If you continue down, so this was the closest, but okay, so it says 86. So there should be a file attached on this file. So if you double click on where it says 86 there, beneath right there, that should be a link to the PDF with the rest of the comps. Now, great point there, Adam. I can understand that. You're right. I mean, I think 6 months is a conservative estimate for this project. But to your point, if it extends beyond that, let's offer both a ceiling and an end of the runway. So let's say we come in under ARV, which I really don't think we're going to. Market values are just going up. We had like 20% of gross over the past month. But let's just say, it were to happen. So what if we were to put a condition in there that would turn it into debt, anything below your expected return, with a plus or minus margin? How would you feel about that?
I'm honestly lost as to what we would be talking about even at this point. So I think for me, like, for this pitch to work for myself anyways, what I would want to know is like a very clear, this is the actual amount that I want to borrow from you. This is the amount that I'm contributing myself. And these are 5 comparable sales that tell me exactly what recent relevant sales are in that market and what I could expect to recapture if I mess this project up. And here is a list of my contractors and my experience in the deal. Because I think there's a lot of different ways you've represented the return on this deal. Like, you started off by saying a 20% return, and then it was a $40,000 loan. But then the $40,000 was actually tiered with another $70,000 loan at 0%. That was drawn in like tranches as you did construction. So I guess I'm still kind of confused as to like how this loan actually works, and wondering if there's not a simpler way to do it. But I'm happy to pass along this question over to one of my other fellow judges to explore some of the final.
Yo, let me jump in here real quick. Ben, good to see you, man. Dude, I'm freaking lost here.
Okay.
Yeah. Listen, I appreciate the pitch. I think a lot of times, I'm gonna give you a little bit of advice, and I'll give you my opinion, okay? I think a lot of times you need to realize that when you're making an offer like this, you gotta sell. You gotta sell yourself beyond the numbers. Bring that confidence. So I'm looking at this deal going, okay, here's my obvious questions. Number one, you're asking for $40,000 as a downstroke for the deal that you have under contract. What's the fair market value right now? If you're getting it for 40, what's it worth?
Fair market value, speculative, but to be honest, I mean, this was an estate sale. So the fact that we managed to get it for what it would have been scooped up. To give you an honest opinion, it should have gone for at least 60. I can burr this and get all my capital out at 65 if you take a look at the numbers. Plus, at that price, we're still working with a cap rate of 6.5.
Okay. So let's look at this thing. So you got it for 40 grand. It's worth 60, maybe 65 on the open market right now. If your goal is to make money on this thing, I find in my life that a fast nickel beats a slow dime, dude. This is a very complicated thing here. Why not just get this thing under contract and sell it for 60 grand tomorrow, make $20,000 on a wholesale fee, and just move on? Because by my assessment, you're gonna have $110,000 into this thing. It's worth $165 when you're done, which means you got $55,000. And by the time you list it with an agent, you appease the retail buyer, you might be down to 40 grand. Why not just get $20,000 today, consider it a win, and move on? What am I missing here?
Oh, to be honest, that's exactly what that's my proposition here. But what I'm really interested in doing is getting more people into the Sault Ste. Marie market. So because this is a private deal, because basically you need to have cash in order to purchase the property, and then there's the wholesale fee, what I'm looking to do is come up with an agreement that makes sense for this property where everybody's going to make some money, but to reduce the barrier for entry for anybody coming into this market. So part of the thing that I'm asking for is for this loan to be transferable to any assignee.
Okay, so let me jump in. We're complicating, we're muddying the waters. We're trying to literally kill 3 birds with 1 stone here. For me as an investor, I look at very simple, uncomplicated deals. If it doesn't make sense in the first 2 minutes, it's probably not a good deal for me. I like the approach of, okay, it's $40,000. I need 40 grand cash so I can secure this deal. And maybe I double close this thing and I sell it immediately for 60, 65. If you don't sell it immediately and don't wholesale it for 60, 65, then I think you proceed to do the rehab, and then you can take on the secondary or tertiary exit. But to approach the deal from it seems as though your primary exit is actually buying the property, doing the flip. You're looking for a draw, you're looking for an initial, and then you also want to have some type of moving the loan to another property. I think it's getting too complicated, man. This is the kind of deal that goes, what's the underlying stuff I don't see? Every time we muddy the waters, there's always unknown variables that I can't assess. And all you're doing by adding more variables is increasing my risk. I'm not getting excited with every additional piece. I'm excited at 40 grand. I give you the 40 grand. That sounds like a reasonable deal. But I think if we need to pull that trigger, go ahead, hit the 40 grand, make the 20 and move on. Unless what you're really asking for is a long-term hold and you're trying to keep this thing as a burr and you want to keep it for appreciation, then I would focus on positioning differently. So I'm a little lost, but guys, am I understanding this wrong? Matt, maybe you chime in here.
Well, yeah, let's hear from Matt because he hasn't spoken yet. So Matt, the floor is yours.
Yeah, so definitely I appreciate the creativity, Ben. And I think oftentimes when an investor starts to learn some of the more unique tools or problem-solving approaches to financing your deal, there's a tendency to want to use all the tools at once. And so I think that you kind of you've learned a bunch of new strategies and you're kind of like, I'm willing to do any of these. And that actually confuses us more and adds a certain level of uncertainty that I think is concerning to the average investor. So I actually have just a handful of questions because maybe I missed a step along the way. So essentially, how much money will you have in the deal yourself?
So I want to leave that optional and flexible. But right now, I have the 40,000. What I was hoping for was a 100% loan to value. And then, of course, the reno would be the additional capital.
Okay. Yeah. No, I just wanted to make sure I understood right because Adam even misunderstood. He thought you were actually you were putting 20 in. I was like, no, I'm pretty sure he's looking for 100% financing. So I think that's the other thing that you're going to find would be concerning. Okay, maybe I trust you, but now it's going to be transferable to anyone and they're going to get 100% loan to value. That seems very scary to me. There's definitely an opportunity to make money on this deal, so I'm not faulting the deal in any way. I just think that you actually brought too much creativity, which is rare for me to say.
All right, guys, listen, we are coming down to the end. If there's no further questions, we're going to go ahead and move right to the final offer. So I'm going to go right back up to Adam. Unless you have any other questions, is there any offers you'd like to present to this deal?
I think I'm good for the time being, but I think if we go back to the drawing board and make this simpler, I think there are solutions for you available out there with lots of private lenders and people. I think in order to get an offer, you're going to probably need to bring some security to this deal, like either cross-collateralize it or offer some sort of personal, get some skin in the game here, like actually put some money in. 100% finance sounds amazing, but it is very rare to come across. And honestly, we would be looking for somebody with a lot of experience in the execution if that's what your actual exit is. Like, I want to see somebody who's done a bunch of flips and in that market and can actually be like, hey, I'm solid on these comparables. I've just done it. So yeah, I think if you get solid on that, I could probably help you. I could help connect you to the right person.
All right, come on, Ben. Give us your offer. Do you have a final offer for our pitcher tonight?
Listen, I appreciate you coming on here and coming straight. I think you can make money on this deal. Do you have the 40 grand or do you need the 40 grand?
No, I have the 40 grand. I can do it. I just want to continue to invest in my business.
I love it. Let me give you a piece of advice I learned a long time ago. If you've got the 40 grand, then you've got a way of paying for this deal. Why don't you raise the 40 grand and so you can use that as a rapport building piece with a possible investor. It's a very low risk deal. If somebody comes in and gives you the 40, you give them a small piece of the pie, and it's a very good way to keep the 40 in your pocket, start building a relationship with an investor, and then that will lead to more and more and more and more deals. My very first deal I did with an investor going back a number of years ago was for $45,000 on a single family home. And I could get the 45 grand from a line of credit, but it was actually, I recognized that if I simply just made a relationship with this guy, I could get more and more and more. And the truth is, that one investor, we ended up doing over $8 million together. So Ben, I want to encourage you, the relationship sometimes is more valuable than the small amount of interest you're going to pay. So I would do the 40 grand, get you the 40 grand, get this thing going. And I think if you cannot wholesale this, and I like to see the fair market number, but if you can't wholesale this, then we move forward and do the rehab and then try to approach that $50,000 pop on the back end. But I think it's really a matter of exit strategies, and there's no point of working harder than you have to if there's an obvious $20,000 to $25,000 spread right in front of you.
That's great feedback. Now we got to move to our last investor, Matt McKeever. With all that is said and done, the floor is yours to give the final offer.
Yeah, I definitely like the creativity. Sault Ste. Marie seems like an interesting market. I don't know a lot about it. At the price point, again, I'm sure I could convince myself into the deal, but the 100% loan to value and the assignability definitely would be a deal breaker for me, just because I really would be looking towards a relationship. And the moment you're just passing along my money, that's a little concerning, especially if it's not at my discretion. So I'm out this time, Ben, but definitely looking forward to future deals.
Ben, we want to thank you so much for joining us.
Hold on. I got the 40, man. I'll give you the 40 grand if we're doing the deal. And if we do the deal on the $40,000, we'll assign it together. I'm happy to take a 30% rip on it, and then we can talk about doing the next deal. If you need more cash, then we can go ahead and fund the rest of the deal as well. I don't know Sault Ste. Marie, but I like you. I invest in people that I like, and I invest in people that show up, and I think you've done both here. So do you want to do a deal with me on a 30% rip if I bring you the $40,000?
So just to clarify what you're offering, so $40,000 capital, and then from there 30% of on the property. Like, I mean, so I invest the rest of the renos and all the rest of it, and you make 30%. Is that what I'm understanding?
What I would say to you is, let's buy the property for 40 grand or whatever the initial cost is. We'll try to assign the deal or wholesale or double close the deal and sell it to another investor for a $20,000 profit. I'll take 6% of that. If that doesn't take and the market isn't working and giving you the price point that you need, then I'll continue funding the deal as far as you need, and I'll take 30% of the back end profit. I'll give you interest only payments so that it doesn't have to, be a burden in your pocket. And that'll be a 30% of the overall deal, whether we assign it, whether we close it, whether we hold it. And I can put that on the table for you for the next 6 months to 1 year. So I can accommodate you. Your original ask was 20% for 6 months. I'm giving you 30% for 12 months. So I'm actually giving you a better deal. Do you want to take it?
30% for 12 months. So what's the interest rate?
There is no interest rate. I'm literally going to give you 30% profit split across the board. So,
Done.
I mean, if you blow this up and you screw, you're done? You're good?
I'll take it.
All right, deal.
Deal.
Deal. Thank you.
Come on, man. That's what I'm talking about. Ben, you stepped up to the mound. You threw your pitch and you got an investor to swing at it. I want to say congratulations to you for pitching your deal and getting it. Ladies and gentlemen, I want to remind you that when it comes to doing deals, getting access to money for deals and hanging out with these investors, you can start that by hanging out with us in the dugout to see exactly how it happened that Ben was able to acquire money from one of our investors. So grab that premium membership at cashflowtribe.com. We're going to be hanging out right after this call to do that. So let me know in the comments, would you have done this deal? I know 2 of them struck out and didn't want to do it, but 1 did. So let me hear what you would say. Say yes if you would take the deal. Type no in the comments if you wouldn't do it in the deal. And I want to know. But Ben, once again, thank you so much for coming on. We appreciate you. All the best on your deal, and hope it's the first of many.
We'll see you in the Sioux, brother.
Come on, man. That's awesome. I love it. I love it. I hope you're excited because we just got done our first deal and it was a success. So for all the people who said they'd get 1 deal or 2 deals, you're on the right track. For those who had 0, come on, man. Y'all got to step up your game. All right. We got to get the next investor on. We got people who are saying yes, they would have taken the deal. Unreal deal. Okay. Oh, we got to know. All right. I like it. I like it. I like it. All right. Okay. I hope you're ready. We're going to bring on the next investor. And I got to tell you his backstory. He was born in India, but at 10 years old, his cousin passed away and his uncle, he lost his eyesight. But during that time, even at such a young age, he had realized the power of real estate investing because he had remembered that even back then, his family owned 3 properties. So since then, he moved to Canada 4 years ago and began investing 2 years ago in 2018 or 2019. So like Ben, our previous pitcher, he is looking to secure his 4th property. And to bring you this investor, his name is Lakesh. Lakesh, welcome to the pitch.
Thank you so much, Daniel. Thank you for having me, guys. I'm super excited to be here. Super stoked. Great to be here.
Ready. Oh, man, that's awesome, brother. I love it. I love it. Tell Lakesh hi in the comments. Big him up because he's about to swing his pitch to these investors. So listen, Lakesh, just like Ben, you got 5 minutes uninterrupted to do your pitch, after which we will have the opportunity to ask questions, go do some negotiation, and then make final offers. I hope you're ready because you're doing it in 3, 2, 1, go.
Awesome, man. Thanks a lot. Let me get my presentation up over here. Okay, so we are going to talk about opportunities in the Peterborough area. Let's go to the next slide. And I'll tell you a little bit about my company. We'll go over this quickly. My company is 4 Freedom Properties. So 4 Freedom, we are aspiring for financial freedom, time, location, and thought freedom. Thought is also very important here because we don't want our investors to stress out about their investments. Many people these days are putting their money in stock market and praying that the market goes up. That's not what we do. That's not what we advise. So our mission is to build great relationships here and find undervalued properties, bring them up to value, and hold them for the long term. Vision is to help 9 people move closer to financial freedom by 2023. Our values are our core values. So they are ingrained in us: kindness, responsibility, honesty, grateful, and the attitude to serve. Let's move on to the next slide. Like I said, we buy undervalued properties and we make strategic renovations. We are investing in Durham, Clarington, and the Peterborough region. We have a great team of realtors, contractors, handymen, and mortgage brokers. Let's move on to the next one. So why real estate? I'm pretty sure that everybody who's watching this show knows why real estate, right? You guys are already aware of this. Let's go to the next slide. If you want to come back to this, we'll probably do that. So why Peterborough? Peterborough is a great city that I believe in. They have a lot of employers: Siemens, Quaker Oats, Rolls-Royce is investing in a new facility. Coca-Cola is pouring in $85 million in its Minute Maid plant in Lansdowne Street. Population is expected to increase by 41% in 2041. By 2041, and 11,000 students study in 3 world-class institutions: Trent University, Fleming, and Seneca College. Clean Tech Research Park is being built on an 85-acre land. The average home prices are still realistic, reasonable, around $440,000. Move on to the next one. So this is the location. We just spoke about Lansdowne Street. The property is on Lansdowne Street, right here, right opposite of this huge park where lots of kids play. There is Home Depot right next to it. There are lots of restaurants. So this is the core area We'll move on to the next one, and we'll talk about the numbers. So the purchase price is $412,500. The amount down is $82,000, land transfer tax and all of that. Renovation is around $70,000. Short-term capital needed is $163,000. What I am asking for is $120,000. I'm going to put in $43,000 of my own money. The idea is to renovate it and in 3 months refinance this. So in 3 months, the estimated after repair value is going to be $520,000. We refinance $86,000, out of which $60,000 goes back to the investor, and I take $26,000 off the $86,000. So out of the $120,000 that you're putting into the deal, $60,000 will come back to you in 3 months. $60,000 will remain in the deal for a long-term hold. My annual profit numbers are just underneath that. Cash flow is $6,300 for each investor, and we can go over the cash flow numbers on the right side. The total income is $4,000 for a 7-bedroom student rental house per month. The expenses, mortgage, taxes, insurance, repairs, management, vacancy, utilities, all of that together is $2,945. So we have over $1,000 of cash flow every month, which is divided between the investor and For Freedom. So $500 each, around $6,000 a year. Principal repayment is going to be $4,200. Appreciation at a very reasonable 5%, $13,000 per investor. Total return is going to be $23,000 for a initial cash outlay of $120,000, but later on it's going to be $60,000. So your return on investment is going to be more than 20% over the 1 year period. That's what I'm offering. Let's go on to the next slide. If you guys have any questions, we'll come back to this slide. I'll just finish my pitch. So roles and responsibilities, you guys know your responsibilities, roles and responsibilities. You just have to collect the money from me and enjoy your life, travel. Move on to the next slide, please. Advantages of this deal, it's positive cash flow, which is rare these days, and it's a pretty good cash flow. It's an amazing city, which is investing in itself. Mark Smith always says that, I will invest in you if you invest in yourself. This city is investing in itself. So you can continue, like I said, you can continue focusing on your life, and this is another stream of income that you will add. If something bad happens, you're covered by owning that physical asset for the long term. Move on to the next one, please. So this is my previous deal that I had done. This is the Bowmanville property, which we purchased undervalued. And you can see the condition. There was no drywall in the bedroom. And let's move on to the next slide. Yeah, just click once more, and that's what the house looked like. The pictures actually don't do justice to the house. It was actually beautiful after we finished the renovation. So that's what we did in the previous project, and we pulled out 90% of our investment. We put in $200,000. We pulled out $185 in just 1 year. So there's only $15,000 left in that house. It's a duplex, which is renting for over $3,500. Let's move on to the next one. That's it, guys. So that's my pitch. Let me know if you have any questions.
Lakesh, that is awesome. So let me break down the deal for everybody just so we're all on the same page like a paragraph, okay? So the purchase price is $412,500. The fair market value is $450,000. Renovations is $70,000. So the ARV, once it's fixed up, the value will be $520,000. The net cash flow after all the expenses is $1,000 with a 15% ROI and 5% appreciation. And what you're looking for is $163,000, 40 something of which is your money, and the remainder you're looking from your JV partner. Did I explain that well, or is there anything that you want to add to that?
That is perfect.
Okay, all right, y'all know what time it is. The investors shall dissect and attack this deal. I hope you're ready, but hold on to your seats. We'll get right into it. We will be right back after these words from Cashflow Tribe. All right, welcome back to The Pitch, brought to you by Cashflow Tribe, Canada's #1 real estate investing community. So after Lakesh finishes his pitch, and we'll see if he gets a deal or doesn't get a deal, we'll be hanging out in the dugout. So we will be going on a Zoom call to discuss these deals, break them down, get an understanding of what is in the minds of these investors, why they chose to deploy capital, why they decided to hold it back. We'll have a whole conversation. We don't want you to be a fly on the wall. We want you to have a seat at the table. So what I want you to do is to go to cashflowtribe.com, grab a premium membership. We want to hang out with you. Okay, so Lakesh made his pitch. We went over it. He said that I summarized it well. Now it's time for questions. This time, I'm going to start with Matt. The floor is yours.
Awesome. Yeah. Can we pull up the number sheet again? Just kind of being a spreadsheet junkie, I'd love to have that up while we're chatting. So just to kind of confirm, Lakesh, this is a student rental?
Yes, Matt, that's correct.
So 7-bedroom student rental?
Yeah, it's a 6-bedroom. We're converting it to a 7.
Okay. And is there any permits or licensing required in Peterborough to be allowed 7 bedrooms?
Yeah, there is licensing for all student rentals. We'll get that after the renovations.
Okay. Is there any risk you won't get it?
Shouldn't be. I mean, we are following the code. So we are working with people who understand the code, and our renovators, our contractors have done this several times, over 25 properties. So we're working with them. We have a good team in place.
Okay, awesome. And then were you guys qualifying for the mortgage, or was the investor responsible for the mortgage qualifying?
Well, if you want to qualify for the mortgage, I'd be very happy to do that, but I can't qualify for the mortgage as well.
Okay. And what sort of mortgage are you assuming for about $1,100 a month in mortgage payments for $416,000?
So I have pre-qualified from a bank at 1.7% right now, variable.
Okay. And then do you run the numbers as well at like a higher interest rate just to see what that looks like?
Yeah, I mean, at higher interest rates, we usually leave out $200 from our cash flow just to make sure that if the interest rates increase, we are able to carry the property if we have enough cash flow. So that's the kind of properties that we invest in.
Gotcha. Because like at a 3.5% interest rate, right? I think your mortgage payment would be about closer to $2,000 a month. I was doing back of the envelope math, but
yeah, I was around 1,400, 1,450.
At what interest rate?
At around 3.2%. Yeah, I calculated at 3.2. So it would be another.
I'm pretty sure it's $500 per 100,000 borrowed at 3.5%. That's kind of my rule of thumb. So I'm pretty sure at 3.5 it'd be 2,000.
We're already calculating at 1.7, right? So it's another 1.8 over this.
Yeah. No, I'm just thinking like that's how I run my numbers when it comes to cash flow. I'm always qualifying at 3.5, just to make sure that should interest rates change. Because is that 1.7? Is that fixed or variable?
Variable.
Gotcha. Okay. Cool. That's all my questions for now.
All right, let's move over to Ben. Ben, the floor is yours.
Well, right away, you said my only role and responsibility was to collect the money and travel. So I would assume you're talking to me, and I'm good with that logic. So you're man after my own travel. That's awesome. Yeah, a couple questions, Lakesh. Okay. All right, first of all, I got to make a point here. The point is this. Too much information. I'm sorry, but it's too much information, man. It's actually confusing. The first 2 minutes, I'm sitting here falling asleep. I think when you're approaching an investor, here's the way I would do this. Number one, I would only give them enough information to understand the risk and the reward right off the bat. And if they need more information and they're the kind of data-driven person that requires all the numbers right up front, then I would dissect that further with people. Otherwise, you're going to lose them. I really do think in the pitch, you literally have one chance to go, I'm here. Here's what I would have done. Guys, I need $120,000. I'm buying this property right now. The ARV is 540. This is how much equity will be in the deal. And there's two ways you make money. Number one, there's going to be the ROI right up front. And then number two is going to be the cash flow. For that, this is the risk. I buy it X, Y, Z. I think if we stop the pitch there at 30 seconds, I would have been more on board because I have my own due diligence team. So to me, it's tough when people go, hey man, there's a brand new bridge coming in town or brand new this and that. I know. I'm an investor. I know. I get the news. So I would just say on this track, I think you've done a very good job putting the details together, but I would just concise it and make it exciting. Make it exciting because the first thing for, depending on the investor you're looking at, for me, I'm an active lender, which means that I know what my risk tolerance is. If you bail on the deal or screw it up, I'm going to take the property, do the work myself. I've never had to do that with an investment partner because we really make sure that it's a win-win for both parties, but lead with the reward. If the reward excites me, I'll evaluate risk. If the reward isn't exciting, doesn't matter how much risk it has or doesn't have. So a couple questions, then I'll make a verdict here. All right, 43 grand of your own money, right? Okay. If we can go back to the spreadsheet real quick, I also am a spreadsheet junkie to an extent here. Okay, so what you're really saying is 19% return on investment. That's on the initial piece, right? So you're offering me just a sub 20% ROI, correct? Or ROC in this case.
Right.
Okay, and then the long-term hold there, when we're factoring is what is the actual long-term hold annual ROI or ROC in this case? If you can just give me the number. Was it 15?
So that would be
based
over,
on all the assumptions.
I think it would be over 40%. I don't have the numbers right now, but you basically cut your investment in half, right? Instead of 120, it's going to be 60,000, and if you're going to get 23,000 of return on that, so that's going to be more like 35-40%.
Okay, cool. So you're saying that I'm going to get 60K back. I'm going to have 60K in the deal, which gives me a 38.3% return. You're offering $23,000 a year. Now, how is the $23,000 computed? Is that including the appreciation? Give me the exact breakdown of the 23K if you can, please.
Yeah, Ben. So cash flow is 6,300. Principal repayment is 4,200. Appreciation at 5% is 13,000.
Okay, so your primary thing is the appreciation because that's 13K.
That's just 5%.
I follow you, but you said the cash flow is 6,000. The second number was what? Debt repayment is how much?
Principal repayment is around 4,200.
Okay, so 4,200 bucks. It's just over 10 grand is cash flow and the debt repayment, and then the appreciation factor is 13%. So the primary way that I get my money back and I get this 38% return is primarily due to appreciation in the market. So I guess here's the conclusion. What if the market doesn't appreciate and we actually have a cool off or correction? Does that take my 38% annual return and cut that thing in half or less?
So if it does that, your investment is going to be 60,000, right? Not 120,000. We already have that 520,000 ARV in 3 months. So you pull out 60,000. 60,000 is what you're left with in the property. And if we have to hold it long term, if there is no, well, I don't think there is going to be no appreciation at all in Peterborough. Peterborough is growing. They are investing a lot of money in their city, and you guys are building communities. Each of you are building communities. I think there's a community that is being built over there. So I don't believe that. I believe that 5% is actually very, very reasonable. Peterborough has grown a lot in the last 3 years, more like 40% appreciation in the last 3 years.
Yeah, but I get you, man. But I don't want to hear those numbers. Like Windsor, my market's grown 35% in the last 12 months. I think it's bullshit. Like it's all a speculation market. So the problem with all these numbers is that there's really no guarantee of the future. I'm looking for some guarantees. What I can guarantee is if you're giving me 60 grand and you're giving me 20% in 12 months, that I can see, or 6 months, whatever this deal is. The challenge I have is this 38% number. Really, I'm just going to cut that thing in half or less. Because if the market cools off or doesn't appreciate, I'm talking basically a 15% on 60 grand. Now, it's only 60,000 bucks. I get it. And I've got more than 60,000 to deploy here. But that part isn't that exciting. Is there a different alternative in your mind where I don't have to keep 60 grand tied up in this thing at anywhere from 15 to 38%? Is there a way to get the other 60 back sooner, even for a reduced rate?
Nothing on my mind right now, but my idea was to pull out all the money in 3 years because of the appreciation, right? There is a 5% appreciation. I've already counted that, but pull out all your investment in 3 years and then hold the property free of your investments long term.
Okay, so how long are you keeping the appreciation here? Is it 2 years, 3 years? Where are you banking this thing before you do? I'm guessing it's a refi you're targeting. Is that right?
Yes.
Okay, cool. How long are you looking for?
So 120 for 3 months and then another 60,000 for a couple of years. 3 years, I would say.
Okay, so 3 years, like give me an exact number, right? Because a couple to 3 years. I think the thing with lending is this. We like to be precise. We like to know exactly what we're looking at. Because if you say a couple years and it's 2 versus 3 years, hey, that changes the rate, right? That changes the rate. And what it changes also is the opportunity cost, right? I like the first half of it. Maybe Matt wants to do the second half. Matt, what if I do the first 60, you do the second 60? I don't know. Is there a way to do this here? Because I don't like holding the whole thing myself the entire way through.
Now, hold on. Let's give a chance for Adam to speak because I haven't heard him. Let's hear your thoughts. Do you have questions, any thoughts or insights?
Yeah, Lokesh, I actually really enjoyed your pitch, and I love that you did bring a bit of the insights about the market into it. I do parrot Ben, though, and I think there were some very distracting points at the start. Like, I'm actually still wondering who the 9 people are that you're trying to change their lives and move closer to financial freedom. Like, I'm still stuck on that. So that's crazy because that has
Dude, I better be one of them. I better be one of those 9, or at least 2 of them. I'm just saying.
I was hoping it would be 3 of you at least here.
There you go. So a couple of things that I've been talking with quite a bit lately with investors in my market, at least, because I'm coming from London, Ontario as well, where there's a couple of large schools, right? We've got Western University here as well as Fanshawe College. And a lot of the insights that I've been sharing with people and hearing in our market is general uncertainty. Okay, there's a couple things going on in the market. Right now, there's a lot of stimulus, so there's a lot of people getting money at very cheap rates, which can allow you to make that and get that mortgage commitment that you have at 1.7%. Now, I would be very skeptical if they were at all aware that that was going to be a student rental at that rate, because as a mortgage agent, I would never approve that loan. Like, there's absolutely no lender that I'm aware of that would be okay with that. So that's one challenge that I've got with this valuation. So that brings some risk into question, I think, for the refinance, because at that time, you're going to have 7 student doors that all have 7 locks on them that have a lot of evidence of students being there. And so that's going to be a challenge for refinancing. Another challenge that I've been encountering is, like, for student rentals right now, there's quite a bit of uncertainty for how many students are going to be there. So if Seneca is able to draw the students still, and they haven't had to, like, seriously reduce some of their international recruiting and other factors, when you get those students, as somebody that's done student rentals before and managed student rentals for Matt, let me just tell you that it is never a good thing when they are home more often. Okay. In fact, you would almost want to stage parties in the neighborhood at other people's houses just to get them out of your house. Because while they're there, most student leases are generally going to be inclusive. Okay. So they're using up a lot of utilities. They're putting wear and tear on the building. They're wearing on the worst parts of the building. Okay. The showers, the dishwasher, the drains, all those things that are actually really expensive and incur a significant amount of repairs and maintenance after a while. So I think, for me, the time velocity of my money and how much more money I could make compared to the risk and exposure here and opportunity cost of sinking in a bunch of capital to potentially make, I guess cash flow is like 6,300 you've listed if you can actually get that mortgage and then some principal pay down and then banking on appreciation for the rest. That scares me when I've got an active business where I can make about 30% regardless of what's happening in the market. Okay, if the market falls, I'm able to dispose of properties as they're falling for all of the various strategies, right? I'm not stuck trying to sell a student rental when there's no students, or stuck trying to flip a modern house that has decent finishes in a student rental area, right? Because that's going to come with its own stigmas. It's going to actually be very hard to sell a nice house in a student area. You could ask Matt McKeever about his experience with this. He has nice houses that are student rentals, but you can't live there as a family now because everybody knows that that's the student rental area. And so did the lenders, and so did the mortgage agents and the real estate agents. And so it becomes very difficult to actually exit those properties. So I think for those reasons, I've got some concerns about it. But other than that, I mean, I agree with you. It's nice to see positive cash flow. The only sentiment I don't love as an investor is, it's positive cash flow at a time where that's hard to find. Because I've disagreed with that for as long as I've been in real estate, which some of you will laugh because you've been in this a lot longer than myself. But I did very important things to make my real estate successful, which is I moved to where the cash flow is. Okay, so the idea of $1,000 of cash flow being, monumental or somewhat miraculous is not the reality for me. And it may be for somebody in Toronto. So I think that there are investors for this exact deal. But I think for myself, I'm more of an active investor. So That's the approach I'd be taking on this, is where can I get more money for my opportunity and my cash. So, but awesome pitch, Lakesh. I really actually appreciate having the pitch deck and having context as to like who you are, the market itself. I think a lot of investors forget that, like, and to Ben's point, we can obviously do this due diligence, but I don't know the major employers. So it's really nice to know that, hey, Siemens actually has a huge factory there, and there are these two schools. Amazing. So thanks for a great pitch, Lakesh.
We're going to be moving to the final offer just shortly, but I do want to give Matt just one chance. If there's anything that you wish to add to this before we move to the final offer, the floor is yours.
No, I think we've covered a lot of this deal, and I guess I'll just summarize by saying, again, I do think, like, I really appreciate the numbers you broke down, Lakesh, and that definitely is helpful. So yeah, looking forward to the next round.
All right, so let's move to the final offer. All right, so Ben Mirzin, the floor is yours. Do you have an offer you wish to present to Lakesh tonight?
Lakesh, number one, really appreciate you showing up, because I think that, dude, that's half the battle, is being willing to be vulnerable. I'm sure this is not easy. And I'm sure that it's difficult to stand up here and get berated, but, you know, it's tough love season, and it's about getting right to the point season, because that's what you want. Nobody wants to be pandered on your side or my side, but I have a lot of respect for you for showing up. So I'd like to find a win-win deal here, Lakesh. I like you as an investor. I like that you've got courage to show up here. That's freaking awesome. But I think there's a way we can do this without me having to expose myself to an appreciation metric that I'm really not comfortable using, because frankly, I don't know if it's going to go up, down, sideways. I don't know anything about your town. I'm sure you do, which is great, but I just don't have that. So here's my offer to you. I'll give you the $60,000 for the 20% that you offer for the 6 months. And then I'd be prepared to give you the other $60,000 for 18% for up to 3 years. 1 to 3 years, pay it off at any time that you want. No setup fees, no lender costs. You just pay whatever legal you need to set up to create that position. And then you'll just have the 60 grand available to you. That way, if you're right and the appreciation takes off and you can make a 38% return with the total numbers, then you keep the difference because you're actually taking the risk. You're the owner of the investment property. In a true passive JV model, I should let you benefit from the appreciation. I'm already on the lender side. So if you can offer me security and you can offer me a steady rate of return, I can take less. And if you're right, you win. And if you're wrong, you're really not that much further behind. But then it's one less thing I need to worry about, one more less piece of due diligence and work I need to do on my end. So $60K for 20% for 6 months, another $60,000 for 18% for up to 3 years, no fees, no setup costs. If that works for you and it's a win-win and you like the deal, accept it. But it needs to be a win-win for you as well, because if it wins for you, I want you to come back and do many more deals with me. So if that's going to work, you tell me and we'll make that happen.
Boom. That's offer number one. So let's move to Adam Martin. Adam, do you have an offer you wish to present tonight to Lakesh?
And thanks again, Lakesh, so much for bringing a really amazing presentation with the spreadsheet included so that we can actually talk through the numbers to be able to make an informed decision. So again, for me, I'm going to be continuing to benefit from the 30% return in our business as an active business that has a high liquidity point and a quick turnaround. So I appreciate you bringing this pitch, but I don't think I can invest in it just based on the time horizon of when it would provide returns.
All right, so Lakesh, we're down to one more person. It is Matt McKeever. Matt, the floor is yours for the final offer tonight. Do you have an offer for Lakesh?
Awesome. Yeah, thanks, Daniel, and definitely appreciate you pitching us, Lakesh. I think one thing that definitely will stand out if you guys watch us talk at all while we're analyzing these deals, we're definitely all obsessed with return on time, right? It's not just necessarily ROI or cash on cash returns. And so for me, buy and hold isn't particularly attractive. I think Ben's made you a great deal. The only thing I'd be curious about on that is, you know, whether it's registered and what position and stuff like that. But outside, yeah, I'm not going to make an offer. Student rentals I've still got a few student rentals. I don't have anything necessarily against them, but buying them at top dollar these days isn't a business model I'm looking to chase. And I was curious whether Adam was going to pick up on the student rental mortgage stuff, and he did. So yeah, that also is a concern of mine, and that's why I was kind of sniffing around the 3.5% rate.
Okay, so Lakesh, you have an offer on the table. So the floor is yours. Do you accept Ben's deal?
Yes, I accept Ben's deal. And I have one more deal for Adam or Matt. So you guys said that you wanted 30% return on your investment. So is there something that we can do where you invest, let's say in my wholesaling business, because I really believe in Peterborough. I think it's a growing city. It's going to do well. And I want to start my wholesaling business in Peterborough. If there is an opportunity to invest and I give you 30% from every wholesale deal that I make, would you consider that offer?
Hey, why are you giving, hold on, why are you giving these guys the offer when I'm the only one that ponied up cash to put the deal together? Like, I came in with the money to put this deal together to do this deal for you. Why are you giving them the offer first?
I've already accepted your offer, Ben. This is another offer. It's my opportunity to be your...
You're violating the first principle of relationship building, is that you don't bite the hand that feeds you. If you got another deal that's offering 30% and I gave you cash at 20%, I would appreciate the courtesy of you offering me the deal first.
Yes, you're right. I'm sorry about that. I should offer it first to you.
So are you offering it to me or to all three of us?
You gotta secure the wealth, Ben, man. Abundance is everything, and you already know that. So,
dude, I agree with you. All I'm saying is I'd rather take 30% then and give these guys 20 if we're doing that.
Well, this is certainly a business model I'm a lot more familiar with, and I will tell you that we could bring a lot of value to any wholesale business by allowing you to leverage our extensive and incredibly well-developed buyers list. We have one of the most extensive buyers lists, I think, in the country, and we certainly have a fantastic process for disposing of deals. So I would be prepared to bring my company to the table with you in terms of dispositions, meaning actually selling any deals that you were able to get. And typically when we go ahead and do that, we do have existing partnerships at 50%. So I would be prepared to split any deals with you at 50% for sure.
Cool. So I'm going to do 40%. I'm going to take the deals at 40%. And if we want to split that, then I'm going to jump in. Dude, you're doing 50. I'll do 40. And I'll tell you what, I'll even put the other deal conditional on you doing this one. Now that we're bringing up a second deal. I'm a little butthurt over here.
Lakesh, the choice is yours. Do you accept?
Yes, I do, Daniel. Definitely. Ben, thank you so much for your trust. And thank you guys. Thanks so much for having me over here. It was a pleasure sharing this platform with stalwarts like you. It was awesome. So I definitely accept. Thanks a lot, guys, for the opportunity.
Thank you, buddy. Thank you. And you know what? That goes a long way. We got to honor the relationship. So share the watermelon. So we got a deal on this? We good at 40?
Absolutely.
Okay, brother. Done deal. Thank you.
There it is. Ladies and gentlemen, Ben has swept the table and has taken deals from both investors. For those who have commented 2 at the beginning of this show, you guys are the real winners because y'all know there is a way to do a deal if you can create win-win relationships. And so congrats to Lakesh, congrats to Benjamin, and congrats to Ben Mirzin for being able to transact on at least visually deals today that will manifest in the future. So let us know, how do you feel about this deal? Would you have done this deal considering the conditions and considering the opportunity? I know there are a lot of thoughts, a lot of things to weigh in. So I want to hear your opinions. And as we move toward the end of the show, I definitely want to thank each and every one of you for engaging because it's so important that you are getting the insight of what these investors are thinking, which is why I want to invite you to hang out with us in the dugout. Listen, this dugout is a Zoom call for us to break down these deals, really get into the mindset, understand what are we considering? What are we thinking about? What is the risk? What is the capital and the return that we're looking to get? One thing I love that Lakesh said is that he really tugged Ben's heartstrings by saying, I want to make you money and make you travel. Now, we got to understand, how do we develop these conversations so that we can strike more deals? So with that said, Lakesh, thank you so much. Really appreciate you. Congratulations. We're looking forward to documenting your journey, brother.
Thanks a lot, man. Thanks, guys.
Yes, sir. So with that said, it has been an absolute pleasure rocking with y'all tonight. I want to thank you for tuning in. I want to thank the judges. I want to thank the guests and investors, and a special thank you to Peter Klosko, the producer. And so until next time, hang out with us in the dugout on Zoom. Go ahead, get yourself a premium membership at cashflowtribe.com, and I'll see you on the other side.
Hold on, one quick thing, bro. One quick thing. I had a competition with Matt McKeever to see who can get more shares tonight, and I think he's doing very well. But I don't know. I think I may be winning, so I'm giving out $100 to Tom Dela Cruz, who's been sharing this stream from the very beginning. So Tom Dela Cruz, you are the winner of $100 tonight for pushing, sharing, and helping me drive. I'll get the final number from Matt later, but I may have won tonight. I don't know. Tough to say. Tom Dela Cruz, good job, brother.
Congrats to Tom. Shout out to you. Awesome job. Ben has won these deals, but we'll see if he has won the share and the stream. So with that said, I will hold you no longer. Shoot us out in the dugout. We'll see you there. Take care. See you soon.
My name is Alex Mustatea. I've joined the Cashflow Tribe about a month and a half ago. I do have a full-time job. I've been doing real estate investments on my own for the better part of 8 to 10 years. It has been very slow, lone wolf mentality. Only been in the real estate investment and business ownership mindset for a few months now, so it was quite slow. Meeting like-minded individuals that I can collaborate with has been a nice change of pace. Cashflow Tribe has been some serious practitioner information that I was able to tap into, but I knew I needed to take it to a higher level.
My name is Soham Gupta. I'm with Cashflow Tribe since April of 2020. My life before I came into Cashflow Tribe, I was working my job and just paying my bills. I was just getting by. One day while I was working at my work, I work as a general laborer, picking a lot of heavy cases, and my knee started hurting really bad. And I was so upset about that work that I thought, man, what am I doing over here? And that really made me take the leap forward to do something about it and join Cashflow Tribe. Happy that I have a purpose now. I learned a lot about real estate investing. I have plans to implement on them, and I think within the next couple of months, I would be making a lot of money compared to what I was working in.
My name is Daniel LeBlanc, and I joined Cashflow Tribe back in March. I was stuck. I couldn't go any further up. So when COVID happened, I was at home. I had no more work. I had one job to finish before, and I finished it. And then I couldn't take on more jobs because people were staying in the homes with kids and all that, so we can't do work with people living in their homes. I've been doing investments since 2006, so it's not my first rodeo. I've done 2 major failures where I had to lose everything and start again. It's very hard. So the whole world's crashing down financially, and you're just like, you gotta go another 7 years before your credit get worked up again, so you can get the courage to go back forward and do your deals again. Since I found Cashflow Tribe, things are going back for the positive, the way I love it. Because before that, I was like losing energy, losing focus for it. The drive was gone. And then when I got Cashflow Tribe, they were talking about all the strategies and all that stuff, and they're saying how possible it can be. It just boosted my spirit back up. I'm back on the game. I'm back finding that life that I lost back when everything went wrong, right? Everybody wins. And if somebody's losing in one of my deals, I don't want to do a deal. I don't care if I win. I don't want it. I could make $1 million on a deal. If I cannot have my partners to win on the deal as well, I don't want the deal.
My name is Joshua Clow, and I joined Cashflow Tribe back in March. Before I joined Cashflow Tribe, I would go to these meetups, and nothing really changed. There was no accountability, which is one thing that's really core to Cashflow Tribe. And so as soon as I had that, not only did you have this intense sense of community where people actually connected with you all the time and were eager to do so and lend out a helping hand, but you also had accountability. So you felt like you had to kind of start taking some action. I came from a pretty poor family. Both my parents were on ODSP and stuff like that. And I never really even took it in that I had a choice. I just kind of almost had this sense of having a vow of poverty on my life forever, that It's just the way it was, the way it always gonna be. And when I started to invest in myself, that was what made the mind switch. And so I'm a big believer in the power of perspective, and that can change your whole world around you. This was a big investment for myself and my wife. I'm ready to go. I want to join council. I want to start doing deals this week, and I want to start a business and just go full tilt with nothing stopping me.